jump right into the market outlook. Market's pretty hot right now. Let's get into it. I mean, we're just seeing the market grind up. Here's the S&P. 1, 2, 3, 4, 5, 6 pretty much green days into new all-time highs. We head over to tech. We see tech breaking out to new highs with Qs. And even, the IWM, the small caps, they're sitting within this macro pattern. But it's a gorgeous pattern. It's an absolute gorgeous continuation bull flag pattern. So I mean, if that can matriculate to the upside, we'll see some small caps running, which are of course the more fun names that we love to trade, things like that. So things are pretty looking pretty good across the market right now. We're seeing a lot of rotation back into those tech and growth stocks, which has been a ton of fun for us. What are you thinking over there, Ben?
So again, you mentioned all the good things. I'm going to mention the one sector to avoid. So again, Shake mentioned all the good things. I'm going to bring in a little bit of the bad. The one sector I would try to avoid is going to be the material sector. VAW is an ETF that we follow that tracks the material sector. Think of stocks like DD, Dow, PPG, names like that. You can see very broadly, you see that orange line, that's the overall uptrend that the sector's been on. Again, it had done very well when tech and some of the other sectors have been a little weak, a few months past, but now it's starting to lose a little bit of steam. We're starting to see, after the uptrend broke, an H pattern forming, which typically is a bearish pattern that you tend to see lower prices in time. So this would be a sector to avoid for the time being.